Welcome back from the break. We will now jump back to our own home turf in Denmark, actually AA Aalborg. Welcome to you, Jens Jensen and Martin. Scandinavian Medical Solution. I'm pretty sure you will give a short introduction to what your company does, but so I will hand the word over to you, Jens.
Thank you very much, Michael, and thank you for using the time with us here in Aalborg. I have with me to my left, your right, Jens Hvid Paulsen, partner from second year of the company, and Martin Lind, to my right, your left. Martin Lind is head of sales in Scandinavian Medical Solutions. Yeah, we have a short agenda for you today, where we will present the company, Scandinavian Medical Solutions, tell a little bit about the organization, our financial results in 21-22. We have a crooked book year, so we just started our new book year, but it'll be visible in the slides. Then a little bit about the economical trends that we see ongoing, and then of course what we're looking the most forward to is the Q&A session. Scandinavian Medical Solutions is an independent company. I started 4 years ago. We are an organization that's specialized in the niche of buying and selling used medical equipment. We are specialized in the area on the bigger scale of diagnostic imaging equipment, such as CT, MRI, PET-CT, and the cath labs, the bigger equipment, what we call diagnostic imaging. These type of equipment is super important to have some unique skills. They are difficult to value. They are difficult to price on the market. They are also very difficult to move, disassembly, pack, and resend. And service and maintenance obviously is also a tricky issue with this kind of equipment, and also the transportations. This is why there is a rather large entry barrier into this segment, and it is a niche industry, despite it has a very large volume and high prices. Scandinavian Medical Solutions joined Nasdaq First North growth market in November 2021. We had a very quick onboarding on Nasdaq First North with a 4-month lean up period, and we had an oversubscription of 425%, which was of course quite interesting to see. We successfully raised 30 million Danish crowns, and now have more than 1,000 new shareholders. So it was a very, very successful IPO and a good process around it. We are a growth company. We have been cash positive from day one and have positive results also before we went on Nasdaq First North. And we have an organization that we are strengthening within the last year and ongoing, where we are hiring in and actually can attract profiles from this niche industry that can give us added value and secure our growth going forward.
Bit about one of the 3 tiers in Scandinavian Medical Solution is the main tier of the company, and what we built the company around from the beginning 4 years ago is what we call equipment, the trading side of the used medical equipment. When we trade equipment, buy and sell, we are very thorough in the selection of the equipment, because it is high technology, it's difficult to move around, and it's very expensive to replace and repair if something is not according to what we call OEM standard. So thereby, with our purchase team, first of all, we have some really deep dive analysis in the systems that we're buying and testing before we remove the systems from the hospital and bring them to the warehouse. This secures us to buy the systems at the right prices, the right places, but also in the full flow of going on to sales and onwards to our customers, having the highest level of security in the quality of the products that we are delivering. As we are selling on as-is basis, full payment upfront from our customers, it is the closest as we can get to actually giving a warranty on the system without actually giving it in legal terms. Important for us to outline in this is point one, that all our customers are paying upfront, meaning we have full security. And second of all, with these thorough pre-inspections, we actually enable ourselves to have pre-order on all the systems before hitting our warehouse, up to 40 to 60% of all the systems going through our company. So this actually gives a very low risk margin for Scandinavian Medical in the branch we are working in. A bit about our second tier is our rental solutions, which is a fairly new tier in our company officially since March this year. This idea came up with where you see hospitals, especially in the private sector, now getting more and more scans patients from the public sector, because post-COVID, for one thing, they need to take this pile of extra patients down. It's very costly to invest in a new MRI scanner and the whole infrastructure around it. So the history has taught many of these private hospitals that instead of putting on a big risk and a big investment on your capex, to invest in this for something where you might only have won a public tender for 2 years of scanning, leaving you with a risk of a very high residual value if you're not coming through on the coming tender. This kind of creates the window for SMS to put in these mobile modular solutions, as one you see on the picture here, where the customer can actually on a short or long-term rent high quality equipment from us, and thereby minimizing their risk and optimizing their focus on scanning patients and earning their money that way around. The fleet is primarily from CT and MRI right now, which is where we see the highest demand in the market, and primarily on the Siemens units. We offer them both from short and long term, depending on what the customers prefer.
What is the ratio on short and long term?
We're renting from 4 weeks. If it's bridging solutions when they're replacing the equipment, we're also seeing we have rental contracts out now on +4 years terms. So it varies a lot on the tailor-made solution our customers need.
Yeah, and 1 year ago we started our parts and service department. The reason why we started this tier is because that we saw there was a big demand for spare parts. So when we have sold systems to our existing customers, then they often require spare parts in the future. So we saw there was a big demand, and that's why we created the after sales service department. We also see that there's a big demand, and there's other companies in the industry which is only doing spare parts with great success. So we know there's a big future for this department. The key to success in the spare parts department is that we can store the right parts at the right time. So when we have a demand in the markets, it's important for us that we have a very short lead time and we are able to deliver within a very short time frame. Some of our existing customers have service contracts with the end users down to about 6 hours. So this means that it's critical for them to be able to source the parts very, very quick and be able to get the scanners back to work. So that's the main focus the parts department has, and we already see now that there's a great success with the department from our perspective. The organization, as Jens Short mentioned in the introduction, has grown a lot during the past year. In this financial year, we have already hired 4 new employees. We have hired 2 new guys in sales because we saw that there was the demand is growing. So to be able to cater to all our customers, we needed more people in the sales department. So we have hired 2 new sales employees which have experience from companies in the industry. So they are already very effective, and the department is running smoothly. We have also hired a guy more for the back office to be able to handle more logistic, and we have hired another guy for our warehouse to be able to pack and ship more equipment. So our base is now very strong, and we see that we are ready to be able to deliver more products in this year than we were in the past.
A bit about our last book year. As Jens mentioned, we have what we call a crooked book year, meaning that we are ending our fiscal year 30th of September. So we just stepped out of our last fiscal year into the new one. For those of you who haven't had the time or possibility to check our yearly report, which can also be found on our Western page at our homepage, shortly glance through that we are very proud that we hit the breakthrough, what we call the 100 million wall, which was for us, apart from being listed, a big milestone for the company. Already in the last fiscal year, 4th year of the company, turning over more than 100 million Danish kroner. Dive deeper into it, meaning that we turned around 110.5 million Danish kroner, and we managed to hit out a EBITDA at 15.3 million Danish kroner, which we're really proud of in the way that we managed not only to grow the top line, but at the same time still maintaining, as we are onboarding people, having more fixed costs to the company, still maintaining a very good increase of a bit over 40% in our bottom line of the company. Which also means that the reality of the expectations of the 5-year plan that we went on Nasdaq with has been cancelled. Not that we don't believe it anymore, but the reality kind of ran over the expectations, meaning that we're now going onward will only forecast 1 year at a time to the market. Our expectations for this year is then 125 to 140 million Danish kroner in revenue.
Yes, just to trying to sum up a little bit of the presentation again. We are a very lean team, and we are increasing our effect on the global market. There's very high ceiling. We cannot see where the stopgap is on our sales front, and we are building the company from bottom up. So we are securing that we have the right building blocks to the right foundation to go higher and higher and higher. The global demand for diagnostic imaging equipment is growing. There's more people. There's more people every day in the world, and also the general idea of healthcare through information has an increasing demand. More and more people they know that it's possible to get an MRI scan that can support their health and growing old without having any problems with their body and their health. So there's a larger demand worldwide for healthcare. So we can see the place that we have in the market, the growth that we have. We are right on the time on this market, and we can see that we can contribute to healthcare worldwide. We are buying primarily from Europe, also from the rest of the world, but primarily from Europe, and selling worldwide. There are still always we have some questions about transportation and difficulties during the aftermath of COVID. we see the prices are normalizing, and we took the biggest absorbed the biggest hit in the last fiscal year. Now it's a new normal, so actually we can see that we can mitigate the higher transport price in the sales price. So we see that that reality also explaining a little bit about the different percentage in increase in the top line and the bottom line. We are extremely focused on keeping this trend where we grow both top and bottom line with a super lean organization. We have added a lot of people to the team, 19 people versus 2.5 people 3 years ago. But we have a lot of focus on making it profitable, both on top and bottom. Yes, and then we're with a session where we would like you to ask as many questions as possible, and we will answer the best way we can and are allowed.
Perfect. I will start with one. Can you remind me, is there a tendency that orders come in at the end of the year? Is it like the old joke about the military that you pour out gasoline in the sewage system? Because I have actually seen your news flow that has been quite hefty on new orders. So is this usual, or is it a good indicator that market is strong?
We have a strategy with when we announce sales that we have an information policy that we follow, and yeah, there's a lot of activity at the end of the year actually to deliver the equipment that's coming out. This equipment also, to explain a little bit about the organization, we buy equipment very far in the future. So we are offering in and contract on the purchase side equipment coming out in 9 months, and then we sell it. 40% of this equipment is actually sold up front. So it depends on when it's coming out. Before, just a few years ago, we could see there was different seasons where there was a lot of shipment and so on. COVID turned that upside down. So right now it's a little bit leveled out. So we don't see that that's a higher increase. And the end of the year, of course, there's a little bit of a peak on the shipment, but again, it's really leveled out throughout the year.
Yeah, and just to add a comment to that, then often the orders are made a long time before we ship out. But when you receive the news about a sale, it's when we have the risk transfer. Before Christmas, we always see that people would like to get the equipment, so that means that we have a lot of shipments going out before Christmas. So maybe that's explained a little bit about the news that you saw, but it's not that there's a tendency that we receive a lot more orders in the end of the year.
And then you touched a little bit upon it on the freight prices, that you have absorbed that last year, and now you're saying it's normalizing. But if I read my statistics correctly, it's actually maybe more than normalizing. I wouldn't say it is dirt cheap, but any comments to that? And I'm not asking you to guide on.
No, but you know that we are from the northern Jutland of Denmark, so we are always super conservative. We don't want to celebrate because we do not know what's around the corner. But the message is more that 6 months ago, the freight prices were so high that we didn't make a margin on it. So of course that has a little bit of an impact on our overall EBITDA. But these days we can see the prices are normalizing, and people are used to the price on the freight is higher. So we see more normalized picture than we had 2 years ago on the freight prices. The freight prices are still high compared to 3 years ago. They are still. We are looking forward to see what happens the next year on the freight prices. That is super important for us as well as everybody else.
Yeah, and at the same time, often when we handle the shipment, then we quote a long time before the shipment actually takes place. So this also means that we have to be conservative with the pricing. So we have to overestimate a little bit to be sure that we don't take an unnecessary risk.
And then there's a question here to the business model. Do hospitals acquire used equipment directly from you, or are you not with the hospitals, but with some sub-suppliers into the hospital sector?
We again, just one step back to answer the question. There's more or less the same service requirement for MRI that is for airplane engine. That means that there's it's very high expectations to the installation crew and also the after sales service, where you have the uptime that Martin mentioned before. You have to be on site and deliver a fix within 6 hours, and you have a uptime guarantee up to 98% of the equipment, meaning you have to be local. You have to have a service organization. So we are not doing that. We are a business to business partner. So we buy as close to the hospital as we can, and we sell as close to the hospital as we can, but not taking over that risk of having the installation and after service. We do support this local independent service organization with the parts that they need to keep the system running for the next many years. And again, there's a replacement cycle. Like an airplane engine, you have to change some pieces of this system throughout outgoing, wearing and tearing parts and so on. So we try to be in that space where we have the minimum of risk, both on the financial side, but also on the equipment warranty side. So we buy as is X hospital, and we sell as is X warehouse. So we are in between B2B company.
And then there's a question here, and I don't know if sales of new equipment is going down due to macroeconomic or something like that. Is there a risk that the larger players, who are selling new equipment, also maybe want to look at where it's maybe growing faster, maybe the used equipment market? So a little bit about the competitive situation and the risk of, if you don't see so much new equipment being sold for, I don't know, budgetary reason or something like that, that they could enter into your field, or do you need to be much more expert on used equipment?
It's kind of divided in two. We have such a small fraction of the global buying and selling of used medical equipment. So for us, if this slows down with the replacing of the new equipment, we can just open our gap to source more. We have a strategy, a long-term strategy, how we can open the markets and get more equipment in, and we cannot see where this will stop. It's possible to open that scope a lot more, both vertically and horizontally on equipment side. But what the manufacturers already have a used medical program, all of them, and they are still in a price segment that deviates from our used segment. So we are independent. Many times when we buy equipment, we are buying it from the manufacturer that's replacing. So we are buying a GE equipment from Siemens. So that's why they cannot close the loop on the pipeline. So every time there's a shift between a vendor, OEM, for the different slots, then we'll have the byproduct, which is the used medical equipment. And actually, when we see the economy right now, it's more people are looking for cost-efficient solutions where the used medical equipment of the highest quality that we stand for and stand behind is becoming more attractive.
So I think you maybe will answer this. Are you unaffected by macroeconomic uncertainty, and you're maybe indicating that could play into your advance, at least not being a headwind? Is that correctly understood?
It is. It's healthcare, and we analyzed, of course, the numbers from the earlier economical crisis, and healthcare always goes steady. Actually, sometimes they have a little bit of a boost in these crises because there will always be budgets for healthcare. And again, the segment that we are in is very little affected by it, and we have to see a very, very, very long crisis to have an impact on the budgeting on the public sector for replacing to new equipment, where we have the byproduct of the used equipment, and also the organizations around the world, they have money to invest in healthcare, no matter how the economy looks like at the moment.
And often we see that when the economic numbers they drop or is getting higher, then we just see our market shift basically. So we're not affected, but we are affected in the way that our market is different when there's a good economical situation in the world. So that's the experience we have. We still have markets to sell, and we still have possibilities to buy the equipment in the market. It's just from different places.
From a purchase side, we're mainly dealing with Western European hospitals, and they're not changing the equipment because it's not working anymore. They're simply having to replace the equipment because new equipment is coming in, which is faster, which is maybe enabling them to optimize the scan flow within the same working hours, maybe 20-40%. So that's the only reason, and they have to keep doing that because there's only 24 hours in a day, and the amount of personnel they have. So healthcare will always be prioritized also for the replacement cycle, where we're buying from to buy the newest equipment all the time to have the fastest machines at the hospitals.
What are the main brands? And I guess in your portfolio, do you have some specialized where you are only focusing in within some brands that you have the knowledge of?
Yes, the resale value is only a good on the brands, which is the major brands in the industry, and that's General Electric, it's Philips, it's Canon, and it's Siemens. So that's the brands where we usually have our focus.
It's called the big four in our industry because they are covering almost the complete market cap. They are very, very close to covering at least 90 to 95% of the market in Europe at least.
And it's really hard for new OEMs to enter the market because the service demand is, like Jens told, really, there's some specific demand for being able to provide the service. So if you have to go into the market, you need a full worldwide service organization to follow, and that's really hard for new companies to enter that barrier.
One of the secrets of us getting out of the gate so fast, and again, I would refer to the investor page as well, where you can see the year-by-year development of our economy and turnover and EBITDA. We have been cash positive from day one. But one of the reasons that we have been able to do that is that we have frame agreements with all the big four, and we are a part of their provider solutions. So we actually are approved to buy used medical equipment from them throughout the four big four. So that is one of the difficult access points to get to be approved to buy from them. And that's obviously something that would take more years, but based on our history in the industry, I think between us here we have more than 30 years of experience in the industry, and it's very much relation building to be able to get these contracts in.
And then let's finalize with the last question, and I don't know whether you want to give that much detail into your competitive situation, but democratic way, I need to ask it. What is the acquisition price range as compared to original price paid by the seller?
It deviates a lot from system to system, but we are looking.
I would say in the way you can, it also depends. We're buying equipment that's coming out of ex-leasing, for instance, where they have to, from maybe a university hospital, they need to have the absolute newest, the highest technology all the time because they're on all these research programs. So they may be changing their high-end MRI every 4th year. Of course, that will have percentage-wise from the new price a fairly high residual value because it's only 4 years old and it's with the all the options included. We're also buying CT scanners which are maybe plus 10 years old, and of course in that way, like depreciating everything else, will have a lower price range in the market compared to the new price of it. So
for MRI, the typical depreciation time would be 8 to 10 years, maybe, and then you can make the math without giving too many of the cornerstones. And of course, in that there have to be room for us to purchase and to sell with a profit. So that would be a little bit less on CTs. The depreciation time would be between 5 and 8 years, even though that many hospitals keep them longer or shorter for that matter.
Perfect. That was the last question. Thank you to you, Jens and Martin, for taking us through the questions and your company. And for everybody else listening in, that was the last company of the day. I hope you have gotten some inspiration to some growth companies to invest in, but may everybody have a very nice day.
For your time.